Hi there, my name is Jamal Khan. I'm a senior tax partner at Churchill Tax Advisors. Today we're talking about HMRC's tax investigations and tax investigations into offshore income or undeclared offshore income. Very, very important, as we see a large number of cases of offshore undeclared income, and people sometimes knowingly or unknowingly fall into this trap. So there are various methods the HMRC investigate through. One is the Worldwide Disclosure Facility, and this option was effectively available, still available, but it came to an end when the requirement to correct came to, the deadline for requirement to correct was 30th of September 2018, and up to that stage the penalties were fairly low for Worldwide Disclosure Facility. Since 1st of October 2018, we've got the failure to correct, and the penalties are very, very large, 100%, 200%. So the tax could be, say, £1 million, and you'd have to pay another £1 million or £2 million or a significant amount of penalties. There are quite a few criteria that need to be satisfied. So you need to be very careful. If you have any offshore income, you need to first of all speak to a tax specialist, tax investigation specialist, and talk about your offshore income. If you're living in the UK and you have offshore income, then you need to be able to talk about disclosing any income that you should have disclosed, your pension. Sometimes people have savings, people have offshore investments, offshore properties, that they need to be disclosed in the UK on your tax return. If you fail to do so before 30th of September 2018, it is still okay, but you need to speak to an advisor on how the best route to be able to correct this. Because if HMRC contact you first, the situation is much worse if it's not a voluntary disclosure. If it is a voluntary disclosure, you get quite a lot of reliefs, but still the penalties are high, but at least it's under your control. If HMRC start the investigation, it will cost you a lot more in professional fees, the tax will be much higher, and because HMRC will always want to get the best of everything, and your penalties will be higher, and the stress and the time it takes will be significantly higher. So best advice is to reconsider your circumstances. Offshore income, if you have anything, if it hasn't been taxed in the UK, you must bring it to the attention of your advisor or a specialist who can then advise you on the right way of disclosing it to HMRC. Thank you.